Is there a way to know that a low volume node will not hold? And the answer is never 100%, but you can get a good idea based on the volume. And before I go through this example, I want to show that 13 minutes before my TP hit last night, I did call in my Discord that I could see us flushing through this low volume node, and we did. Hit my TP, made 3,000, and was done for the night. Now, I want to go through last night, which was June 24th's price action during Asia session, because to me, how I trade using order flow, every setup in the book was here, and you can just analyze this frame by frame through the volume, exactly how the market moves and how you can get super precise entries based off of it. So as Asia opened, and I want to bring it back a little bit, up until this point, we were just kind of chopping before Asia. And as it opened, we created an area of low volume. If you look from the 22,407s to the 22,412s, there is significantly less volume in this area than above and below it. Now, for me, how I look for price to move is once you have a rapid expansion move with a lot of aggressive buying in this situation, it created this low volume area, and I expect price to retrace into this area. I want to see sellers try to sell, but the buyer who created this area of low volume to defend it, and that moved the market higher. That's the basis of a low volume node. Now, however, as price consolidated up here for about 30 minutes, you can see there's a lot of aggressive buying, but the market isn't moving up. And for me, I look for effort versus reward. If there is a lot of buying in this area, but the market cannot move higher, the market should be making higher highs and higher lows, lower highs and lower lows. That's how trends move. In this range for 30 minutes after Asia opened, we're having all this buying, and you can see that represented by the volume. You can see it on the volume profiles. The market failed to move higher. So I called out in the Discord, I said, I am going to short, and I'm going to short down to this low volume node. And if price can break through it, maybe target VWAP, the point of control, or the recent demand level that was created before Asia opened. And I did take a short. What happened was we came right down to this low volume node. We had buyers or sellers trying to sell in this low volume node, showing me that the buyer defended it because we did have a nice reaction out of it. I scaled 3 cons off and held 2 until break even, and then price eventually stopped me out. Now, what I want to go over is I had people saying, why did you re-enter shorts instead of taking the long at the low volume node? Because I was in a short, took 3 off, got stopped at break even, but then shorted here, and had people in my Discord asking me why I wasn't looking for longs. Well, if we are looking at low volume nodes in a bullish scenario, like in this example, we are looking for this low volume node to hold and then create a higher high and keep the trend going and keep the trend moving. But this range was a lot of aggressive buying earlier, and out of the low volume node, we actually ended up making a lower high. We actually weren't able to break out of this range that buyers had been previously exhausted in. So if the low volume node is going to continue the trend, that's not what happened here. As a matter of fact, it ended up making a lower high, and now we're seeing rejection out of it. I got in shorts again here, and this time I had a target of this previous demand level where we had a lot of selling, but the market failed to move lower. And once we hit a low volume node, I was going to move my stop to break even, because once again, it's just a probabilities game. The market could have rallied off of this, but after the first attempt, I didn't have as much confidence in this low volume node because I expected it to break above this level of consolidation where buyers weren't able to move the market up. Since we weren't able to move the market higher, all these these buyers up here are still trapped because it never came back to their entry. So their P&L, they're still underwater at this point. What happened was we came back to this low volume node. If we zoom in, it was a 0 print, and you could technically say this broke through the low volume node. However, we are at VWAP and we saw a strong reaction off of it. At this point, I went break even here. I know more people that were longing here. Not a bad idea if you're basing it off of, low volume nodes. However, once we came back up into this low volume node again, or up into this area of consolidation again, as soon as we got into the level that there was a lot of aggressive buying, the market failed to make a higher high first. We had a lot of aggressive buying at this area, which was a high volume area, and we're seeing rejection out of it again. that is when in the Discord I said I could see us flushing through this low volume node. You can see this was before it ever got broke through. And I was saying, and you can see my entries right here, I'm saying, okay, this is the third attempt that we're touching this low volume node. It's really not a low volume node anymore because there's been a lot more volume transacted here. The point of this low volume node was for a buyer to defend so it could move the market higher, because that's where we factor in large participants. But every attempt that buyers try to move the market out of this area of low volume, we're just met with lower highs. We're met with more buying efforts in a previous area. This is the most important factor. We're met with more buying in a previous area that buying efforts weren't being rewarded. And once again, it's effort versus reward. If there's a lot of buying, the market should be moving up. And if it's not, there is a wall of resistance. There is a passive seller. These efforts from the buyers are not being rewarded. That's when you can capitalize on strong shorts. That's when you can see the quick floods to the downside because of all these buying efforts not working. So I was break even here. I know people that were longing here and they were like, oh, these longs are about to cook. However, once we got up into this area of consolidation of previous buying, we immediately rejected out. I said, I'm expecting us to flush through VWAP. I'm expecting us to flush through this area of low volume. And I had my TP set at the range down here of previous market structure demand. After we fled, and it happened very rapidly, because that's how these things work. It happens very rapidly. Once these buyers' efforts have been completely worn out, they get stopped out of their position. That's when you see the quick floods to the downside. The market came right down to the point of control. It came right down to this area that we had previous market structure demand. I got out of the market, and now we see a rally out of it. You know, it consolidates down here again in the area that we had previous structure demand. This is a lot of aggressive selling, and now we see it to the opposite side. There's a lot of selling down here for 2 hours, and the market isn't able to move down. That's showing me that a large buyer is now in play looking to move the market up. And so I got out at the perfect time, and then the price rejects off of it. What happens? We blast through now through VWAP. What happens? We retrace to VWAP. Sellers try to sell after it's already been broke through, and then we see a rally out of it. So these same things, these same patterns, these same volume tendencies happen every day. And if you can read the market through volume, you can get super precise entries and exits, letting you know when the market can reverse on you. My target was down here because I knew last time we were in this range, sellers' attempts weren't able to move the market down, showing me a large buyer's in play and could move the market higher. That's exactly what happened. Order flow allows you to capitalize on these short-term moves that can get you insanely high risk to reward situations, and that's what happened last night. So the main thing is low volume nodes are a huge part of my strategy. However, if the basis of this low volume node was to continue the market moving up, that's why the buyer created it. They want the market to move up. All this buying wants to move the market higher, but it's failing to do so. That can show you after it's been tapped into, not once, not twice, but after a third attempt creating lower highs, that's when you can see these areas get flushed through. And when a low volume node gets flushed through, a lot of the times, that's when you get the pretty fast expansion moves. So for me, these are the three things I look for: is the low volume node, market structure demand, market structure supply, exhaustion versus absorption. We're at a key level. We're at an area of supply. Buyers aren't able to move the market up. You can get really, really quality plays based off of it. So a lot more of these to come, but this is just one example of how you can use order flow to capture perfect moves. So I will see you guys later.